All right, hey guys, Brad here. Time for another Elliott wave video. We're going to take a look at the usual suspects. That is crude oil, metals, the dollar, NASDAQ. Whoa, it's going to be a very, very interesting week with the inauguration happening tomorrow, Monday, MLK Day. Let's see what unfolds for the remainder of the week. Let's start with the crude oil chart. I'm out of town, that's why the sound might be a little different and I don't have my camera with me. In any case, here is the daily chart of crude oil. What we're really tracking here is overall a very large corrective region. Again, this is the daily chart of crude oil. It has certainly completed what sure does look like an impulse 5 waves up. So really the million-dollar question now is this corrective action, the pullback off of that last top at 79.39. By the way, I have flipped over to the March contract. The daily chart I'm using, continuous back adjusted contract. But going down in the time frames, we will be on the March crude oil futures contract using the NYMEX data feed. Okay, so what I was saying is it's really about, is this pullback corrective or impulsive? Because if it's corrective, it suggests that crude oil could find support and then rip higher and create another crazy move much higher. That's not my view, just based on what I'm seeing. Simply performing analysis based on what we see, I still remain bearish on crude oil. So with 5 up, you would expect it to come down to at least the 382. At least the 382, which is 74.55. Now look, it's already pulled back over $3, which is pretty remarkable in itself, and it did pull back from an area we were clocking. Yeah, it extended, but we kept clocking this topping region. Here it is in more detail. Okay, so this is the 4-hour chart of the March futures contract, and the parameters that I'm going to be following are going to be, let me zoom in because I know some of you guys are on smaller screens. So let me zoom in here and just give you some parameters based on the 4-hour crude oil chart. So the idea is, if this has really topped in this C wave, which sure does look good because it measures okay as an impulse, it measures well. It did extend, that's the thing. It did extend. But for a C wave, this is a reasonable extension. And by the way, the larger structure, which I didn't mention, but let me just mention it here. Here's a larger structure. A, 3 waves up in an A. This is back to the daily chart, by the way. A crazy overlapping and very complex and difficult to track B wave. That in itself suggests B wave. I'm thinking this is a B wave triangle, B wave triangle. And then what you would expect to see at the end of a triangle in a B wave position is you'd expect to see a 5-wave move C wave. In other words, a C wave made up of 5 waves. And as you know, when I put yellow Fibonacci levels on my chart for a 3-wave move, the standard fibs for a 3-wave move are the 100 fib, the 1236, or the 1382. Well, guess what? On this large degree structure that I just showed you on the daily chart, A, B, C, going back to the 4-hour chart, look where this potential C wave topped. Right at the 100 fib, almost to the penny. Okay, and then it got rejected from that level. And on the internal structure, it does measure as 5 waves, which is what you would expect to see. I mean, it's reasonable to count this as 5 waves. With this being the 3-4, and then another 5-wave move, or you could argue this is a 3-wave move for the C wave, for the 5 of C. But in any case, just taking the fibs at face value, this topped in a reasonable area where you'd expect it to top. And now now we're going to try to discern what is going on internally here. But so for parameters, let me give you some parameters. If the downside setup, which is what we have here, we have a downside setup. The question is this going to come down correctively or impulsively? Because if it comes down correctively, then this is the more bullish interpretation. And what do I mean by corrective? Okay, so right now, you would agree that there's one wave down, there is a retrace that got rejected. So one way to interpret this, if you're bearish, you're going to want to see an impulse to the downside. So here are the clues. By the way, Elliott wave is not predicting anything. I'm giving you parameters. This is the speculation right here that I'm showing you. If you are bearish, you want to see something like this. You want to see 5 waves down. If you are bullish, then you want to see a corrective pullback, which would be something like this. Can it come all the way down to get into there? Sure. But the idea is if this is going to come down in 3 waves, then you're going to want to see something like this, where the A is already in place. B, you want to come down and not get really too much past this 382. Now, another consideration is that if you're an Elliott wave guy, then you know already that the 382 is a typical target for an A wave. So I'm kind of combining I'm giving you parameters, I'm giving you levels, but I'm combining it with a little bit of education. So if this does come down 3 waves to the 382 and then bounces, it is possible that this is just an A wave, and you get a B wave bounce, and then another final shove down, because anywhere in this gray zone is a very acceptable level for a wave, either a wave 2 or where you'd expect wave 1 to the downside to terminate. So this is the game. It's really about corrective versus impulsive. So the first clue is going to be if price doesn't make a new high over 78.55. Okay, here's your parameters. If price doesn't make a new high over 78.55, okay, then downside potential remains. So what you'd want to, the first level of resistance, what you'd want to see is how does price react to this level right here? It can rattle. What I always expect to see is that price gets some bounce, little support here, but it's going to break through. I think it's very likely that it breaks through this. Now look, if it doesn't even come down here and get near this and it comes back up, just remember, there's another fib up here that is alive, 82.74, that this could extend. Look, I'm not predicting anything. I'm just showing you parameters. So the idea is if price cannot get back above 78.55 on the March futures contract, pressure is going to remain to the downside. And if so, you want to see how does it react to this area. This is a zone and a fib. This is confluence. So is price going to come down and rattle around right here, but then eventually come down to here? And if that's the case, the next clue is going to be when it bounces off of this region and it starts coming back up. If it gets rejected here, that's going to be more indicative of finishing an impulse to the downside, which is bearish. Whereas if this comes down in 3 waves to this level, finds some support, and then gets back above this level, like with feeling, and it just keeps coming, then it's possible something much more bullish is at play here. But we don't need to guess right now. You can scalp these zones. Now, right now, I don't have an edge because we are literally in the middle. So my preference is to wait and see what price is going to do and get better clues. That's my plan. So those are just the ideas. Let me just go down one more level. So, here is the playing field, right? You've got that top, that last top is 79.39. Again, this is the March contract futures on the NYMEX data feed. So 79.39 is the top, and what we have is a potential. See this, it's potential. This could be 5 down, but I think it counts better as 3 down. 3 down right to here. So you could already be in that corrective wave, but this would be a C wave with potentially already having a 1-2 in place. This could be a wave 4. So this could be wave 1 of C. I think there's more clarity on this 4-hour chart to me than there is on this. This is the nano stuff I just showed you. Going back down here on the 8-minute chart. Something of interest, my buddy David inside of the Professor Trades Club in the Elliott Wave Room. David is a great analyst, great member, very generous with his contributions. He and I have noticed that when we look at this technical indicator called the Market Order Bubbles tool by Leviathan, we've noticed on the 8-minute chart it is fairly reliable. When you see a bunch of buying on the 8-minute chart like this, massive volume, outsized volume in these candles as price comes into a known topping region, it's a fairly good indicator of that a top, at least a local top, is in place on the 8-minute chart. And you can see this playing out. And the reverse is true. When you see the red bubbles, there is an indication that it's possible a local low is forming. So here, I could see this as a local low, and then one more bounce up could get you in back up into these yellow fibs, but absolutely a line in the sand is at 79.39. Do not want to see that breached at any time. So I don't have a lot of an edge right here, but my plan is to wait and really observe these major levels on the 4-hour chart. I think these are more important right now than this noise that you're seeing on the 8-minute chart. But I would just say that overall the pressure remains down, even though, yeah, of course, this can rattle around and come up higher. You know, maybe this is I mean, it's anything is possible. Okay, I don't want to start speculating about what this might be, but I will tell you this is a good level to look at, 76.93, which again, back to the 4-hour chart, 76.93 is this last low. In fact, we might as well just put a little, let's mark that up, because you know that's a clue of sorts. If it gets below there, I think it's likely to come down into here. In fact, there's your scalp signal right there. You could actually, if it breaks that low, and let's go back to the lower chart now. If it breaks this low, I think a reasonable scalp would be to bring it down from 76.93 to right down in this zone, but that just call it 76.40. So there's a potential, what is that? What would that be? That's a 53-point scalp to the short side. So here's a scalp idea. If it breaks that low, going back to the 8-minute chart, if it breaks this low, then I think you're good to scalp it down. You know, 30, 40 pips. But Armando teaches us just grab 20 pips and then leave the runner on board for the remainder. So always pay yourself 20 pips or so immediately. But because of these red bubbles right here, it's possible that this bounces up a little bit more and then comes down. I would play it the exact same way. If it bounces up and starts coming back down, I mean, the safe scalp is if it breaks this structure, because this is a structure now, right here at 76.93. So if it breaks that structure, I think it's going to come down. So there's a scalp. Now, another short idea would be if this does come up from here and get into here, I think somewhere up into here would be a reasonable short scalp. But this would be more of a swing short because you're going to get a lot more potential down. If it comes all the way back up into here, I would view that as potentially the 2 of C. So if it can come back up, if it does come back up, like in other words, what I'm suggesting is if this is already wave 1 of C, then what I'm viewing this, if it comes back up, I would view it as this. I would view it as an ABC for wave 2 of C, which is just to say that there's a lot more downside. So the idea would be if this is a 1 and this is an ABC for wave 2, what you're really getting on is not a short scalp, but a short swing trade, because what you got is a 1, 2, the longest and most powerful wave is going to be wave 3, which could bring you all the way down below here, and then you get a wave 4, and then a final shove down towards this 1618 for this C wave. All right, that's if it doesn't come directly lower. That's if it doesn't just crap out from here and accelerate and come down, in which case you could view this as a 1-2. So there's a lot of potential here, but what I'm giving you the parameters. I mean, the name of my channel is Elliott Wave Made Simple, so I'm trying to not confuse you and make you crazy with all the details and the potentials and the variables of Elliott Wave. I'm just trying to get you parameters. So 78.55 to the upside, 76.93 to the downside, with an initial downside target of that 100 fib at 76.11. And then these white fibs, the 1618, coincides with the 382. This is confluence. This is look, if it breaks whenever it next breaks the 76.93, it's not going to be unlikely to see this level down here. You know, if it doesn't make a new low below 76.93 and break 78.55, something else is going on. I'm going to have to, I don't even have, I mean, the only other upside target I have, but I don't have an upside structure yet. Although I suppose you could argue if you are a bull and you need an upside structure, this is the best you could do, is if that's a move up off of that low, and then 77.14, that if that low is in and we do go higher and break those upward parameters that I was just showing you, yeah, then this would be one of whatever, this would be wave one of whatever this final shove is. But I find that entirely less likely. Why? Well, because of the structure of what's going on over here, which looks very corrective, very corrective. So I'm not bullish. I'm not immediately bullish from here. Okay, so there's your parameters. Maybe I went too long on that. Hey, listen, if you're watching this and you're getting some value, do me a favor, please smash the like button, subscribe, hit the notification bell. Listen, I'm part of Armando, the Professor Trades, the club. A lot of members are watching these videos. We're in the club knocking these trades out all week long. If you're getting value from these free videos, just hit the like button, subscribe. The link to the club is in the description of this video. And the amount of value that you're getting out of that club is ridiculous at just over $1 a day. It's a complete no-brainer. We're trading this stuff all during the week, and I'm posting charts all during the week. You're getting some value here on YouTube for free by simply liking and subscribing. But if you really want to get the massive value for a little bit more than $1 a day, got to join the club. The link's in the description. All right, so let's hop over to gold now and take a quick look. Again, I say the same thing all the time about gold, which is I'm not convinced that wave 4 is done just because of the amount of time. This would be a very brief wave 4 if that is the low for wave 4. It barely burned any time off the clock in relation to how much time it took for this wave 3 to develop. So yeah, I'm still viewing this as a B wave. I mean, this is an overlapping corrective looking wave structure right here, just taking it on its face value. So with gold, let's see how price can react. Now I'm going to go down a level now and show you something a little more actionable, but this is the lay of the land. I will still consider this a B wave. I mean, it already, let's see. Okay, so that high is 27.6130. This B wave that I have as a top is 27.6130, but look at this. It just made a simple V shape. The reason I don't like this as an impulse is how overlapping and gorpy all of this is, because this would have to be wave 1, which if this is wave 1, that's extremely ugly and overlapping and does not follow any standards for a wave 1 unless it's some kind of a diagonal. But that's less reliable. You know, if you just take it at face value, this is corrective overlapping, therefore one more low is reasonable to expect. So, but again, we're just looking at parameters. So these are the long-term parameters, which I haven't touched in a very long time, but 28.26 is the top. This is the February contract. I really need to flip this to the March contract. I'll do that soon. But for right now, on this February contract, on the COMEX data feed, 28.26 is the last top and a very important level. So as long as we get rejected up here, I'm going to still, like if we make a new high and it comes up in here, you know, I'm going to consider this the B wave over here. You know, until it breaks out. this is still B wave territory. It truly is. So let's go down a level and try to discern what may be happening here. So if this is a C wave, wave 1 was a diagonal because it came up in 3 waves. And then you had a wave 2 correction, and then wave 4 came down and broke the level of wave 1, further confirming that the best way to count this is a diagonal. And then if this is coming up in wave 5, if it hasn't already terminated, which at first I thought this is such a beautiful place to terminate because it hit that ratio box almost to the penny, came down, but then it came all the way back up and made a new high. So the way I'm kind of thinking of this now, and I didn't put this measurement on there, but if this is an A, B, C for wave 5, because in a diagonal, wave 1, 3, and 5 are going to be made up very likely of a 3-wave move. So this could be A, B, and then this is the C wave here, with either that being the top or it comes back up one more time. So in gold, the best trades we've already taken, I think. We've had some great shorts, we've had some great longs, and I was expecting it to get rejected there. We traded short, it worked beautifully, but now it's back into murky, overlapping no man's land. So, for the moment, what I prefer to do is just wait and see. So now that I'm thinking about it, I didn't put the 1764 fib on there, but that's probably going to, let me see here, because in a diagonal, wave 5 is not expected to go all the way to the 200 fib or beyond the 200 fib. On a diagonal, it's more likely, and that's just a coincidence that I put that 5 there right at the corner of that ratio box because it made a new high. And then now, if this is an ABC for this nano wave 5 of C, now I'm sorry, you're watching the sausage get made, but this is an Elliott wave thing. If wave 5 is going to be made up of 3 waves, which in a diagonal, it would be reasonable to expect that, then let me just throw on the yellow fibs, which if you've been following me, you know that the yellow fibs are what we're typically looking for in a 3-wave move. And would you look at that? Now look, you just watched me do this, and the reason I'm kind of excited by this or interested in this is because look at the confluence. Okay, so if that low holds, this local low, 2736, see where these yellow fibs come in. Now I'm going to clean this up here. Let me just I want to put it exactly right. That low is 2736 even. So I like to go to my coordinates and make it exactly right, because in Elliott wave, these fibs get hit to the penny so often. When I'm doing my analysis, I like to get it exactly to the penny so that if it does hit a fib level to the penny, I just want to know about it. And I want to move these labels over to the left so we can see, and I'm going to brighten up these yellow fibs so you can see the confluence that I'm talking about. If this low holds and you want to take a long scalp, the risk reward right here I think is favorable. So let me grab that tool, long position. So let's just say after the open, if you're able to get into a long position, let's say you get a terrible entry. Let's say it opens and it pops. Let's just say you get in at 27.43 even. Then the stop would be just below that last low. So that's a very tight stop. That's a very tight stop. And then if you wanted to make your minimum scalp target would be this 100 fib right there. If it's going to come back up, that would be your minimum target. But due to the confluence up here where that 1764, there's really 3 things going on that I would point out here. The 1764, which is a reasonable target for a wave 5 of a diagonal, and the 1236, which is a reasonable target for a C wave in an ABC. Let me just put the ABC on here. A, B, C, and that would be a micro degree, ABC. So you've got the 1236 which lines up with the 1764 as a potential target for the wave C of 5, of a larger degree wave C, which is really of all of this is a B wave. I know it's confusing. The thing about Elliott wave that's difficult for most people is you have to hold all of the degrees, like in your mind, you have to hold a whole bunch of different things in mind at the same time. And when you drill down on these lower time frames, I'm still thinking of, when I drill down on these lower time frames, I'm still thinking of the higher degree time frames simultaneously. And that's difficult to think of like 4 things all at once while you're performing analysis. So anyway, blah, blah, blah. So that's the deal with gold. If you wanted a long scalp idea, I think this would be it. If you want to just see if it doesn't make a new low, if it can come back up and break above that, just call it 27.43 on the February futures contract, and then keep your stop below, that last low, which is 27.36. So you have a very tight stop with a fair amount of upside potential. And the third parameter is that you're still inside of this ratio box of the larger degree for wave 5. So this 1764 fib meets the criteria for being the topping region of wave 5. The 1236 fib is inside of that same region and happens to coincide with the 164, which is, all of this is inside of this ratio box. So, this is definitely a topping region if it didn't already top. Now look, if you want a short scalp, then I think a reasonable short scalp would be if it breaks this low right here. If it comes, actually, now I don't like that, sorry, because this made a new high here, so it needs a retrace. Now a better short idea would be it needs to come up more. Here's your short scalp idea. Here is your short scalp idea. If this comes up from that 27.36 level, all right, if this comes up from that 27.36 level and cannot get, well, first of all, if it comes up correctively, and it cannot get above those gray fibs, 27.59.20, okay, 20, and I'm just going to change the color just to make it a little easier for you guys to see what I'm talking about. Okay, so a short scalp idea was if this comes up in 3 waves, and tops out in these red fibs, and then starts coming down and breaks that low, that's where you grab the short. So I know I'm giving you a lot of variables all in one video, but the long scalp is you just, after the open, just go long and put your stop below the previous low. And then your target's going to be, the minimum would be the first yellow fib. The ultimate target would be the second yellow fib at 1236 up here. Okay, but the short setup would be if this comes up in 3 waves and cannot escape these red fibs and then starts coming back down and breaks that low. If you want to be safe, just let it come up here and don't do anything. Just observe it. Just let it come up. If it rejects from here, you want to short it down here and look for a ride in a wave 3. If it comes all the way up and gets up into here, then you want to short it and put your stop up here, and you're going to trade hopefully what is an impulsive structure to the downside. So, I think it is better to look for the short side right here in gold than it is the long side. Okay? It is better to look for the short side in gold here than the long side. And this is why, the view on the daily chart and the timing of this. But, here's the other thing. If I'm wrong, this is going to break out. Okay? So in order for me to be wrong, this is going to break out from there. That just means my count is wrong and something else is going on. So silver, I'm not going to talk too much about. It's very similar kind of posture. Here's the daily on the silver, which is similar to gold in the sense that it can absolutely come down further into these fibs and still be just a corrective wave for a wave 4, and we're still going to get one more massive rip higher. The idea for this to have been done here has to be a diagonal because of the overlap. Okay, 1, 2, wherever you count the 3, 4 from, it overlapped the top of this wave 1. No matter how you count the 3, 4, it overlapped the top of the wave 1, making this a diagonal. So just keeping it really simple, it did make a new high here. This is similar to gold in the sense it made a new high here, which kind of, you know, this would have to be the wave 1 of a diagonal. So if that's the case, it's going to bounce, and the clue is going to be, is it going to come down and get into here in 3 waves, or is it going to come down impulsively? And if it does, then I think these are your targets down here. Okay, your targets would be for silver below, just call it 28.27. Yeah, you're coming down here approaching this 100 fib. I'd actually have to adjust this because I haven't adjusted this fib yet. Actually, yeah, no, I did. I did adjust that fib already. So 27.90, 28.30, somewhere down in here. But the point is, gold is much easier to follow right now structure-wise than silver, so I'm not going to talk too much about silver. All right, boom. NASDAQ, what's the deal with NASDAQ? Let's keep it zoomed out for a second. The real question is this low in the NASDAQ the low? Look at this channel. Very nice looking channel. Is this the low? It did come down correctively. It came down correctively and got into, let me zoom in on this for you guys on small screens. It came down correctively and it got into the price territory of where you would expect a wave 4 to be. And what that is the blue. Now look, if you've been following me, I'm always using the same colors for everything. Blue tracks a wave 4. Minimum 382 to 50% fib, got right in there, came down correctively, meaning overlapping, non-impulsive. I was wanting it to come lower, but you know what? Look at this. It tagged that 100 fib. It tagged the 100 fib, meaning A, B, C. So that is enough waves in place. There's enough waves in place for wave 4 to be in. That's why I put this box on here. Is that the low? Could be. And if it is, this will complete 5 up. But it's a little tricky here, but I would give the edge to the bulls right here, because it's mainly because of, well, it's never because of one reason. It's always multiple reasons. But the reasons I would give it to the bull, the first reason is this came down into the blue box for where you would expect a wave 4 to be. The second reason is wave 4 you would expect to be an overlapping corrective wave difficult to trade. That tracks, that's consistent, overlapping. So this could be all of wave 4. Of course, there are still targets down here. A line in the sand, unless this is going to unfold in a much more complex manner, is 21,896.75. Now let's drop down to the 4-hour chart and get this. If this is going to be 5 up, that's going to be a little more indicative of the low being in place. So what I mean by 5 up is 1, 2, 3, 4, 5. And we have a few different reasons why we like that. Okay, it's the parameter wise, no overlap with wave 1, held in a blue box where you would expect wave 4 to hold. This does look like a wave 3. They did not come all the way back to grab the liquidity now. They had the chance to, but they didn't. And then it made a new high. So now you have a ratio box over here, and you have a zone over here that I was using as a sell zone. So if this is going to get 5 up right into this zone, into this ratio box, I kind of like that. And then the idea becomes, well, if that happens, if this is wave 1 of 5, what do I mean by that? If this is wave 1 of 5, the idea would be either this 5 could play out as an ABC. So if it comes up here and that's an A wave, then you get a B wave and then a C wave up for wave 5. So the first thing we want to do is discern where might this top out. Well, in an A wave, it could already have topped out. But if it wants to come up more, I like this region up here for a short. Okay? I like that region up there for a short. Here it is on the 8-minute chart. And that's what this would be is this needs to come up impulsively and not make a new low. It really shouldn't come back below 21,500, let's just say. So can this rattle around a little bit and come down? Yes, but it really cannot break 21,500. Okay, there's your parameter for NASDAQ. You do not want to see it come below 21,500, and what you want to see it do is stay above here and then come back up and get further higher into this zone. And then once that happens, if that's a legit wave 1, we are looking for a pullback either in a wave 2 or a B wave. Because the idea would be, once this tops out up here, we're going to track this as a correction, not an impulse down. So in other words, we think it's going to come down. If it tops out here, we think it's going to come down, but it would not make a new low. So just for guidance and to give you a visual, something like this. Yeah, something like this makes a lot of sense to me. Okay, so, I guess what I'm saying is I'd be looking for long scalps on the NASDAQ. Long scalps on the NASDAQ. Unless it gets below this level right here. Okay, so I wouldn't necessarily call that a sell box just because it's there and it's resistance, but at the same time, yeah, I mean, I don't think it comes back down below there. Honestly, I think it could come down, but I think I'm more bullish on the NASDAQ than not. Okay, so those are your parameters on the NASDAQ. Okay, so last little plug for the Professor Trades Club. If you're getting value, please hit the like button. Go ahead and subscribe, hit the notification bell. I'm doing like 2 videos a week. But if you really want to get the value, I mean, you're getting this for free. Well, for a little bit more than $1 a day, why not get the real value of Armando, who is the professor inside of the Professor Trades Club? You're going to get, for a little more than $1 a day, you're going to get all the teachings of Armando, the professor, and you're going to get all the Elliott Wave stuff. We've got great members in both sides of the room, the Elliott Wave room and Armando's room. He's a scalper day trading master, like no kidding. You're going to gain pips, but really what you're going to gain is a psychological edge by joining the group. Trading is hard. Doing it alone is even harder. Join a community with other people. Have you been moving your stops? Have you blown up an account or two, God forbid? Have you been tinkering with when to take profits? Are you so afraid you stop out too quickly all the time and just get chopped up? You keep losing money, stop out. Then it goes where you wanted it to go. After you've stopped out and lost money, then a move happens. You move your stops and it always seems to get hit. You feel like they're targeting you. If this is you, you got to join the Professor Trades Club because we address all these things and we're teaching you how to stop doing that. Okay, and it's the support and the reassurance and the confirmation over and over again of a group of like-minded people led by Armando. That's the value. And at just over $1 a day, it's the biggest no-brainer you're going to find. Honestly, you don't need to watch very many other videos. Just stick to the Armando, stick to the Professor Trades. He has a way about him, a way of teaching. And the group think it starts to help you. And then you start getting this momentum in a positive direction and building upon it and building upon it. You can't do that by yourself. At least I certainly can't. I've been part of a group for 5 years. I've been with Armando for over 1 year. It's critical, in my view. So anyway, that's my plug. The link is in the description of this video. All right, let's finish out this video now. Let's get back to, you've got the parameters in the NASDAQ. Let's take a look at the dollar. Okay, I think the dollar is topped, man. I think that was it. It came down impulsively, and now it's moving correctively, which just means overlapping. This was not overlapping. This came down in potential 5 waves. This is overlapping. And really the guidance that I keep in my mind at all times is this weekly dollar chart. This is a B wave. Look, when it was over here, I started talking about this liquidity. They're going to come back for this liquidity. Well, they did, and they got it. So I think that it's okay, but it's not just that on its. It's never just one thing, right? It's a bunch of things. They came back for liquidity. That's Exhibit A. Exhibit B is it came into the fib structure where you'd expect a B wave to top, correct? And then now, if this is a 3-wave move, here, meaning A, B, C, for this B wave to be composed of 3 waves, you'd expect this to be an impulsive structure. Well, That's what we found here is an impulsive structure, this being the 3, 4, 5. So this was the wave 4, this was the wave 4, and then boom, 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 boom. You have an impulsive structure for wave 5. And that all of that was just right in a little thing right here. So this whole thing is a very nice looking C wave inside of this overlapping corrective structure. And look where the fibs are, the 100 fib. You've got the 1382 there. Just for grins, let me put the 1236. I'm just, look at that. Nothing but wicks above the 1236 fib. Nothing but wicks for now, at the moment, above that 1236 fib, which is a topping type of idea. And actually that weekly candle is one of those, I think they call it a barbell candle, but that is very often like they call it a decision candle. You know, it couldn't make up its mind, but sometimes at the top, price can't make up his mind. Let me zoom in a little bit more on this DXY dollar weekly candle. See that? There's an equal wick on the top and an equal wick on the bottom. It couldn't decide. And the way I view that is that was the last throes of this wave up. So here's some parameters for the dollar. This is a perfectly good region to look for rejection. So call it 109,756. And the way I would be counting that, if this is the case, I'd be counting this as a wave 1. And we are tracking, this is complex, but it's corrective. So again, the name of my channel is Elliott Wave Made Simple. So if I were going to label this, this is just really simple. Okay, 5 down for wave 1, looking for a 3-wave correction. So, yeah, this is crazy, but I mean, the structure, look at that wick, look at that massive, wild swing, but now it's coming back up. So this is a 1-hour chart, but if that's just simply going to be an ABC, actually now, let me just throw the fibs on here because now I'm curious. You know, I'm like a broken record because trading is repetitive. When you find something that works, just keep doing it over and over again. And what works for me is measure stuff. If you think it's moving in 3s, measure it with the yellow fibs, and I'll be darned. Look at that. So 108,827 is his low. Okay, look at where this projects to. You know, anywhere in these yellow fibs. So again, you know, if this is a 3-wave structure, this should top out somewhere. Before I even measured that, I was suggesting to you that this 109,756 level, it would be an area that somewhere in this region, and also these gray fibs, right? You know what I'm going to do? Let me move this over and get, oh crap, that wasn't the right label. Sorry, you're watching me do homework. You can't do homework with the magnet on because I usually try to get these levels exact. All I want to do is move this over a bit, okay, and then just for try to keep the chart a little clean, I'm going to move the labels to the left so you can see the confluence. Okay, look at this confluence between the 1236 and the 764 of this retrace area, which is also right by the 109. So anywhere in here is where you would expect this to top. Now, I'm dead wrong if it just keeps coming. If somehow this is something else going on and the dollar wants to keep, I mean, it certainly could do that. Of course it can. But right now there's a setup for the dollar. And this is your parameter. This is your parameter. If it comes up above here much, I think it's going to go higher. And, you know, the next, you know, it would take out this high. That would be, you know, just based on his history and price action, it would take out this high. And then very likely come back down and backtest the scene of the crime and then keep going. And all I'd be looking at it is to do is come up a little higher in here. But based on parameters, look, first of all, this hit right in a ratio box. It measures in 5 waves and it got rejected. And it's coming down impulsively, and then now it's corrective and overlapping. So the evidence is mounting that the dollar has topped. So the real nail in the coffin is if this holds, if you get rejected at 109,756, if it can't get any traction and can't get up into this area, and it starts coming back down and then it breaks the 108,602 level, that's the next key, right? I think it's very much more likely that we're going to get below this pivot zone, and then you're going to see some acceleration. And maybe by then, metals will have bottomed, and then metals are going to get their 5th wave higher. Okay. Anyway, that's the deal. That's the dollar. That's my weekly analysis. Tomorrow's a holiday. So take it easy. Do some homework. Join the Professor Trades Club. Come in while the markets are closed. Join the club. Watch some videos. I've got a few introductory videos that live in the Elliott Wave Room. By the way, if you're in the Elliott Wave Room and you're watching this video and you've never seen my introductory videos, there are two really good ones. They're permanently now in the Elliott Wave Room. Permanently there. So if you're a member of the Professor Trades Club and you haven't watched those videos, I highly recommend you go to the video section. And they're just going to always stay there, part 1 and part 2. And soon there'll be a part 3 and part 4. I'm going to keep growing that. But that content will just live there. So you can gradually get better and better at your own Elliott Wave analysis, because that's my goal, is to teach you how to create your own levels for high probability trades and scalps. All right, cool. Thanks for watching. The description contains all the information you need to improve yourself in 2025. Let's go. All right, guys. Thanks for watching. Take good care. Bye-bye.